Kathy, let's begin with how the market has responded to this data. Actually really well behaved. Treasuries, yields gap lower, then we retrace. You see the same thing with the FX market too. Are we just discounting that number as an outlier and nothing else?
Yeah, I think that probably people are reading through it and looking at the weather and looking at the government shutdown and then falling back in the 3-month average, which is around 185 or so, and saying it's not so bad.
Anastasia?
I think what we saw last month was a big surprise, and therefore this month is a big surprise as well. But as Kathy points out, if you average out the two, the trend is still very much intact. And also you have to keep in mind that the economy is somewhat capped and as far as what the trend of job creation should be. So it was not realistic to see anywhere close to the repeat of last month. So we're giving some of those back this month for sure.
Greg?
I think all that's true, but at the same time, I am surprised, right? And so you have this on the heels of bad news out of China, just this global growth story that's slowing. This is yet another kind of example of that. So I am a little surprised by it. It is a one-off, perhaps, but it is a shock in that regard.
I'm more surprised by how well behaved the market is big.
Yeah,
not just the number.
Yeah.
The market is certainly well behaved, but if you look at gold, for example, it's up almost 1% on this disappointment. So in that sense, the gold market, I guess, was surprised, to your point as well, with just how big of a miss this was.
Greg, it's hard to know how to push this through the market because we had a big miss on a headline number and the wage growth came through a little bit hotter than expected.
Yeah, so I think that's ultimately good news, right? And so the communication out of the Fed has basically said pretty explicitly that they want to run it hot, right? Whereas when Yellen was talking about it, was more of a wink, wink, nod, nod. But I think they were much more explicit, and I think that's actually really good news. We'll see though if it translates into retail sales and other types of kind of consumer confidence in the data there. So that's to be seen.
And that's exactly what we're not sure about, is whether this is going to translate into retail sales, because one of the trends we're looking for this year is to wage growth to strengthen. And if you analyze this number, we're probably running close to 4% on this last average hourly earnings. So some of the retailers could actually be hurt by this combination, because top line may not be growing as economic growth is slowing down, but yet the margins get squeezed because of this number.